Let's start off with this great chart on the BTV terminal. This sort of stay-at-home summer rally that we've seen in Asia tech stocks taking a bit of a breather as of last week. Let's just get that terminal up. That MSCI sub-index falling from a record reached in early August. We're watching the Kospi snapping a 3-week gain. We are looking at the TAIEX capping a back-to-back weekly loss now. So are we starting to see, if not in the US, in Asia, some sense of, I guess, caution returning to the froth that we've seen in the tech sector?
Yeah, I mean, when we had the first rebound, economic rebound, was all led by the pent-up demand, and a lot of that went into computers and computing components. So you look at regions like Korea and Taiwan providing those memories and semiconductors, as well as China producing the actual computers, benefited from that. Whereas from here, there is a lot of that news is priced into those tech stocks, and a lot of that buying has been brought forward. And if anything, the components of growth is likely to rotate from the retail sales driven to goods producing in manufacturing and IP, and hence there's a strong possibility of that rotation out of those frothy tech stocks into more economic sensitive areas of the market, and that's in fact what we saw last night as the S&P broke to a new high.
Yeah, so we started seeing last night, of course, a return to favour to an extent, you know, United Airlines, for example, Carnival, some of these really badly beaten down, you know, pandemic-related stocks. There's got to be a great deal of volatility as we get volatility in the opening up, right?
Yeah, absolutely. I mean, you have a lot of uncertainties. Number one is the election. So as Trump officially starts his campaign, he was nominated, he accepted that. So now he's going to go hard on China. His popularity, or the polls are indicating he's nosediving. So he's just going to come out and look tough against China, and there will be order to it. So that's going to lead to a lot of volatility in the market as we get closer to election day. But I think at the end of the day, the rotation, the direction, there's this inconsistency between the market. One part of the market you look at Nasdaq 20% above the pre-COVID levels. It does suggest everything's good. And the other part of the market, you look at the financials and tech stocks, that tells us things are actually pretty bad. So what is it? And I think a vaccine will change that. And as we get closer to the possibility of vaccine being released sooner than later, that leaves the door for a massive volatility, rotation-led volatility in the market.
Nader, with really stocks flying high, there's more demand for hedges, of course, especially given the uncertainty. There's GTV chart on the Bloomberg showing how well gold has performed. Everybody seems to like it. In your notes, though, you say that you're already selling out your position in gold. Why?
Gold is, first of all, is becoming way too crowded. It's a massive haven, safe haven that everyone bought into, in line with what bought tech stocks as well. So if you look at measures of froth, tech and gold is just the frothiest you have. And the other one was the collapse in real yields was the driver for gold prices to head higher. And from here, we're starting to see the nominal yield, actually, especially since the Fed rejected the idea of a yield curve control, nominal yields or bond yields are picking up, and that would be a massive headwind for the crowded positions in gold. Gold drops around 1,800. That becomes different from these levels. It's frothy and vulnerable to downside.
And I guess we could also see more upside risk if we do get a vaccine very soon, which takes me to the question of the day from our NLive colleagues. Which asset is the most sensitive to vaccines?
Well, most part of the market, like financials, areas that actually haven't performed. So first of all, you will have some of those airliners, like the one front line of those COVID-impacted areas, airlines. They will be quite responsive to a vaccine being announced. But more broadly, sectors like energy, financials, and auto sectors, most of the cyclical value part of the market at the sector level, and at the regional level, emerging markets in Europe, which have lagged U.S. quite substantially since the March lows.